Good morning, good evening, good afternoon, everyone. I'd like to welcome everyone to the Digitalization and Finance Symposium in Asia, hosted by the OECD. We'd like to start off today's session on central bank digital currency, as well as AI and finance, with an opening remarks from the Deputy Secretary General of the OECD, Mr. Masamichi Kono, followed by the opening remarks of Mr. Ito Hideki, the Vice Commissioner for Policymaking, Digital and FinTech Strategy of the Japanese Financial Services Agency. Over to you, Mr. Kono.
Thank you for the kind introduction, Yokoi-san. So it's my great honor and pleasure to welcome you today to the 2021 OECD Asian Symposium on Digitalization and Finance. Over the 2 days of the symposium, today and next Friday, we'll be joined by digitalization experts from the private and public sector to discuss the latest trends in the deployment of digitalization in finance and to examine what policies are needed to support fintech innovation in a safe manner. I would like to first thank the Japanese government for its generous support in holding this event, which has enabled the OECD to engage with Asian countries beyond the OECD membership on this critically important topic. So most of the world is still battling the COVID-19 crisis, with social distancing and limitations on travel still present in many countries. And this has accelerated and intensified the trend of digitalization that was already taking place prior to the pandemic in financial markets. Digitally enabled financial services have helped economies avoid a complete standstill during the pandemic and has the potential to support a digitally enabled recovery, improve efficiency in financial services, and foster financial inclusion. This is really important. At the same time, the deployment of innovative technologies in finance gives rise to new challenges and risks, which could amplify the existing risks in financial markets. These could include, inter alia, issues around data privacy and confidentiality, investor and consumer protection risks such as positive discrimination or bias in credit allocation, when innovations such as artificial intelligence are used by lenders, or increased cyber security and fraud risks may also come to the fore. So this symposium builds on the work of the OECD Committee on Financial Markets and its expert group on finance and digitalization. And the discussions are supported by a background report, Digitalization and Finance in Asia, that looks into opportunities and challenges of digitalization in finance in the Asian region. The Asian region is home to the highest number of online internet users who are the most keen to adapt new technology or new technologies and are comfortable with using cashless payments, crypto assets, and digital financial services. At the same time, parts of the region remain unbanked or underbanked. For example, the ASEAN member states. So this background report notes that rapidly growing digital innovation in finance has allowed and will be allowing citizens of those countries to enjoy greater accessibility to financial products and services, which will be unlocked through smartphone applications, for example. It is true that many of the pilot central bank digital currency projects, also run by central banks in Asia, aim to promote financial inclusion. And the background report provides a regional close-up on the Asian experience, given the concentration of central bank digital currency projects in the region. The report also discusses new forms of decentralized finance and calls for greater coordination and cooperation among countries. The Blockchain Governance Initiative Network for Decentralized Finance is a good example of the importance and value of multi-stakeholder dialogue. And the Financial Services Authority of Japan is an active supporter of this network. We thank you for that. In that vein, I would like to encourage all participants of the symposium to actively engage in the discussion and to further promote such dialogue. So, distinguished guests, colleagues, ladies and gentlemen, as our financial markets and our economies become more digitized, it is important that all stakeholders are involved in the fintech ecosystem to convene and discuss their respective viewpoints in an open and constructive manner. The OECD stands ready to offer its continuous support through the analytical work of its committees on policies that could encourage the development of digitally enabled innovation in finance in a safe and sound manner in the Asian region and beyond. With that, I wish you all a very fruitful and interesting discussion. All the best. Thank you so much.
So, should I start?
Yes, please.
Thank you. Ladies and gentlemen, I'm Hideki Ito, Director General of the Japanese Financial Services Agency, JFSA, and I'm responsible for the digitalization policy of financial services in Japan. It's an honor to have this opportunity to share with you about our views and the policies on financial services digitalization. Technological innovation in its application to the financial sector is moving extremely fast. AI is coming into use in various aspects of financial system, and the decentralized financial ecosystem known as DeFi is expanding rapidly. In addition, most countries, including Japan, are accelerating research and studies in CBDCs. These are all developments that could revolutionize the space of finance, and it is very timely that we focus on these topics in this event. In addition, COVID-19 has further accelerated digitalization, and people are adapting to new technologies and new styles, as can be seen like this in online conferences becoming commonplace. In this kind of rapidly changing society, it is extremely important for financial authorities whose mandate is to stabilize the financial system and protect the consumers to understand the risks as well as the opportunities and benefits that new technologies can bring, such as improving user convenience and solving social problems. In this regard, JFSA was relatively quick among national authorities to start considering the possible impacts of decentralized financial technologies, such as blockchain. First, since 2017, the JFSA has been deepening its understanding of decentralized financial systems through discussions with regulators and academia at the Blockchain Roundtable. Based on the takeaways of these discussions, we raised the issue of governance of decentralized financial systems at the G20 under Japan's presidency in 2019. As a result of the fruitful discussion, the G20 members agreed on the importance of strengthening dialogue among a wide range of stakeholders, including technologists and so on. In March 2020, the BEGIN Blockchain Governance Initiative Network was established as an effort to embody the G20 consensus. The BEGIN is an open and neutral platform for the sustainable development of the blockchain community, composed of various stakeholders such as academia, engineers, business, and regulators. Decentralized financial systems have different characteristics from traditional financial systems, such as unclear entities to be regulated, which may make it difficult to apply and enforce conventional entity-based regulatory framework. On the other hand, the possibility of an alternative approach that could achieve both innovation and consumer protection, such as automatic enforcement of regulations using smart contracts, are suggested. Therefore, the BEGIN is discussing solutions to the governance issues of the decentralized financial system with the various stakeholders without necessarily being bound by existing regulatory approaches. For example, When the Begin joined the FATF outreach meeting on the revision of the FATF guideline on a risk-based approach to virtual assets and virtual asset service providers this April, they pointed out issues that should be addressed to achieve regulatory objectives well into the future, such as risks of deterioration in regulatory enforceability that expansion of peer-to-peer transaction could bring. It should be mentioned that such issues were identified based on the discussions by diverse participants, including engineers, academics, and authorities. We have been contributing to Begin's activities such as document creation and community management as one of the stakeholders. In addition, in July this year, we established the Digital and Decentralized Finance Planning Office in the JFSA. Also, the study group on digital and decentralized finance began to explore how to respond to the digitalization of money transfer methods and securities products. It goes without saying that we have made necessary policy revisions to balance the innovation and user protection until now, in light of the advancement of information and communication technology to date. However, regarding the emergence of new financial services that decentralized financial technologies brought, such as so-called stablecoins and DeFi, we are pursuing to make further examination of this issue. In addition to these efforts in decentralized finance, we are implementing various measures to support digital innovation in the financial sector in general. For example, through our FinTech support desk and proof of concept hub, we provide seamless support for companies that are willing to take risks and pave the way for new growth. We will continue and strengthen our efforts in policy development, monitoring, consultation services, and so on, in order to improve corporate productivity and user convenience, while ensuring user protection. Finally, collaboration among jurisdictions is essential for resolving issues in the digital field. This event will feature discussions by government officials, experts in various fields, and academics from Asia and OECD member countries. As a sponsor, I would like to express my gratitude to the OECD for their efforts in organizing this event. And I hope the fruitful discussions will take place that will guide us to future policy planning in Japan and other Asian countries. Thank you very much for your attention. Thank you.
Thank you very much, Mr. Kono and Mr. Ito, for those opening remarks. I think it marks a good start to the beginning. And so now we'll be able to start the first session a little bit earlier than planned, and I think that will be bode well since CBDCs is such an important topic. And so I'd like to introduce the moderator for session one, Central Bank Digital Currency, latest developments and design considerations. The moderator is Art Hubin, the Director of Financial Markets Division at the National Bank in the Netherlands. He's also the chair of the OECD Committee on Financial Markets. Art. You're on mute.
Thank you very much, Mamiko, and thank you to the two Japanese colleagues for this introduction on the importance of CBDC moving forwards. My name is Art Hubin. I am chair of the OECD Committee on Financial Markets and director of financial markets at the Dutch Central Bank. But perhaps more importantly, I was chair of a working group of the Bank of International Settlements on the development of central bank digital currency in 2018. And we wrote one of the first official sector reports on central bank digital currency and the challenges there are. And it's surprising if you look at the debate on central bank digital currencies by central banks, that the sentiment has shifted from rather negative to very positive. And if you look at the report 3 years ago, and you look at speeches by central bank governors and by directors a few years back, they were very concerned and rather negative. The concerns were primarily that central bank digital currencies would increase run risk, that they could undermine the funding of commercial banks, and that they could thereby jeopardize financial stability. What you see now is that the tone of voice of central banks is much more positive. I think central banks recognize that consumers have a desire to be able to settle a lot of their transactions in a digital currency, and preferably also an officially backed a digital currency, and that technically we have designed ways, or we have convinced each other that there are ways to contain the financial stability risks. So this is a bit the lay of the land that we will be discussing today. So the sentiment is much more positive. And I think if you see the main drivers, central banks are convinced that the unique advantages of central bank money, primarily safety, finality, liquidity, and integrity in a digital form, will be part of the future of central banking and the future of money. And as our economies go digital, they must continue to benefit from these advantages of central bank money. And money is at the heart of our financial systems, and it has to be continued to be issued and controlled by trusted and accountable institutions which have a public policy objective and not a private profit objective. So central bank will have to continue to evolve to be fit for the digital age. Now, the interesting thing is that across the world, there are more than 50 central banks at the moment experimenting with CBDC projects, and we will be discussing this today primarily on the basis of the Asian initiatives, because even though there are central banks that have already made the step towards the introduction of central bank digital currency, in particular in the Caribbean area, for instance, but also in Cambodia, the progress is quite notable. I am convinced that Asia is at the forefront of these developments, and Asia is digitally much more advanced than other continents. So this panel is really useful to get a sense of where we're going and how the progress will be and what the challenges are. So the aim of our panel today is to hear from our distinguished participants and to learn from each other's experiences. We would like to better understand what considerations have been driving the initiatives and the experimentations in the different countries, why the attitudes are more positive towards CBDC, and what the main design choices are and the challenges are, and what the things are we should be very careful about. Because we have to find a way to develop CBDC, but at the same time secure financial stability and monetary stability, and also probably data privacy and other issues. So without further ado, this is the background of today's panel. We have 1.5 hours, a bit less. I would like to structure the panel as follows. We will have 2 parts in the panel. The first part will focus on the key drivers, the actual design choices, and the objectives for central bank digital currencies. So that's a bit the present and the past, looking where have we come from, why are we doing it, how are we designing things, and where do we stand now. The second half of the panel, which will be in about 40 minutes, will focus on the future, on the way forwards. What are the policy challenges? What are the real difficult things? And what are the messages for central bankers and for policymakers? And I would like to end, so the last 5 to 10 minutes, I would like to end by asking each panelist to summarize, preferably in 1 minute, what are the main takeaways you have for all the participants in today's conference, so that you can really powerfully send your message on things that you think are important and that should be at the forefront of everyone's mind. So let me introduce the distinguished speakers of our panel. Thank you very, very much for being here today. The first speaker will be Mrs. Vachira Aromdi Saudi Ka. Welcome. She is Assistant Governor from the Financial Markets Operations at the Bank of Thailand. Wonderful to have you here. Then we will have Mr. Masaki Besho-san. Very happy to have you. He is head of the FinTech Center Payment and Settlement Systems Department at the Bank of Japan. Konnichiwa, good to see you on the panel. Then as third speaker, we will have Sere Chea. Wonderful to see you again. I recall we spoke earlier. She's Assistant Governor at the National Bank of Cambodia. Arun Suostay, I hope that's my reasonable Cambodian. Finally, we will have Mr. Phantom Seokgu Yun from, he is CEO at MetaMUI, a public blockchain network based in Korea, but he's also the founder and the CEO of Sovereign Wallet Network. So we're very happy to have you also, so that we have a real private sector representative on the forefront of the innovations that are taking place. So thank you all very much for being here. Maybe we could start that I asked Vachira, Masaki and Sere 3 to 5 minutes to introduce yourself, but in particular, what is happening in your country? What are the concerns and what are the design features? What is your feeling on the way this debate is progressing? Could I start from Bangkok with you, Vachira? Can I give you the floor?
Thank you, Mr. Huben. But first of all, let me good morning to you, and then good afternoon to the rest of the participants. It's my great pleasure to be invited here and then join this panel discussion about the central bank digital currency. The question is, you asked why? What is our motivation in the past? Let me say that the technology development is the key things. I think we are living in the world that is increasingly changing and also increasingly be disrupted quite a lot. And then financial sector has been seen as its fair share for digital disruption over the past decade. And then one of the most potential disruption force is blockchain technology, or DLT, distributed ledger technology. So at the Bank of Thailand, we would like to conduct some experiment on the central bank digital currency, doing the research and development to understand, to have a better understanding that how this could be used to enhance the efficiency within the financial system. But the way we do it, the characteristic that we do it, at first we try to study some other central banks studies, and then we talk to our neighboring country who already has been investigated, already hands-on experiment. And one of the suggestion that we got is we need to be hand dirty to really understand what it means, and then the implication for each jurisdiction, because each country has its own and has some unique characteristic in the financial system. Therefore, I think for us, the motivation is to understand. I have to say that we have a two phase. The first, we start with the wholesale CBDC at 2018. At first, to try to understand how it could be used in the domestic payment system, and as well as if it can be used at the cross-border, because we know that the blockchain technology, they are introduced to solve some of the pain point about the cross-border thing. But we know that the cross-border is quite difficult. So okay, we start with wholesale CBDC with the domestic. We try to replicate the payment system. And the second motivation is we would like to prepare ourselves, not just only the central bank, but the financial community, the Thai financial community, to prepare themselves to really at least get to understand and better understand, because if the DLT is widely adopted, how we should adapt ourselves to the new, I'm just call it new world. And also, we also, when we start doing this, the motivation and then the choosing, whether wholesale or retail, the retail part is quite difficult at the starting point, because quite a lot of concern on financial stability, which I know you are talking in the latter part, financial stability, financial landscape, or even monetary policy, transmission mechanism. So, okay, we start with the wholesale CBDC. But last year, 2021, we start looking at the retail CBDC. The motivation is, of course, once we understand a bit, we do not want to claim it, we understand all, but when we understand the technology, how can we adopt it if we would like to do the wholesale? So we would like to understand the retail CBDC so we can understand the overall big picture. So 2021, we are starting exploring how to do the retail CBDC. To motivation, the other one is not just only to understand, the motivation is, I think lately, how can I say, the rising of the crypto, the rising in the cryptocurrency and also stablecoin. I don't know whether I can use the word threat, also make central bank more concerned about how we will conduct monetary policy or sovereignty in the future. So that's why we think that it's the right time that we should understand and do some experiment on the retail CBDC. And also in some, they also said that if in the future, we should provide to all people to at least have some access to the money that is to the general public, that the money that is safe and trustworthiness issued by central bank. I think that's all the motivation for us at the Bank of Thailand to start with the wholesale CBDC, and then we are now trying to do the retail CBDC. Of course, the cross-border we also do with the wholesale with other central banks to really understand it, and then so we think that can help us better understanding the overall picture of the CBDC. Suppose had it be adopted soon.
Thank you very much, Bashir. What I hear you say is that you started with wholesale and with domestic, and in particular to experiment and to understand how it works and to try things out in practical manner in yourself. You are shifting now from wholesale also to retail, and you are slowly feeling your way also with cross-border use in cooperation with other central banks. And you also see it as an important instrument for inclusion. So to include broader segments of the population. So thank you very much. That is a good point of departure. Then we move to Japan, where I'm sure there are very, very noteworthy developments. I'm very happy to have you, Masaki. Can I give you the floor?
Okay, thank you, Art. My name is Masaki Bashir, and I have recently taken up a responsibility as head of FinTech Center in the Payment and Settlement System Department of the Bank of Japan. But even before that, I have been heavily engaged with our CBDC works for the last couple of years. And today, it's a great honor for me to have this opportunity to talk about the CBDC with the distinguished colleagues from other central banks and the private sector. And first of all, I would like to touch upon the Japanese payment landscape to explain on our motivations. In Japan, the amount of banknotes issuance exceeds 110 trillion yen, accounting to 20% of its nominal GDP. It's 8% in the US and 11% in the Euro area. This is largely due to the low interest rate environment in Japan. However, it is also true that Japanese people prefer cash. Banknotes are maintained clean. There are almost no counterfeit. It's safe to bring cash even at midnight. In addition, nearly 100% of adults have their own bank accounts, and ATMs are available throughout the country. These show that cash is safe and convenient, and existing payment systems work well. Under such circumstances, the bank has indicated that it has no plans to issue CBDCs at this moment. On the other hand, the BOJ has also made it clear that it does not believe that the current payment and settlement systems will have to remain unchanged forever. This is why we published our approach to general purpose CBDC last October and started our proof of concept from this April. Then, what are the challenges we could address to further improve our payments landscape? We have three considerations. Firstly, while we commit ourselves to provide cash as long as there is demand, declining population may place upward cost pressure on our cash distribution mechanism. While Japan is a country with relatively dense population, the population is declining sharply in rural areas. Therefore, it might be the case that access to cash becomes difficult in some regions. Second consideration is fragmentation in the payment market. In the late 2010s, new entrants such as e-commerce platforms, telecom carriers, public transportation companies, retailers, tech ventures started their new retail payment services. Along with them, banks also introduced new user interfaces for their payment services. However, the proliferation of non-interoperable services has led to severe market fragmentation. Scale and network effects in payment services have not been fully enjoyed. And thirdly, we are considering how we could develop our payment markets so that they are more fit for the digital society. With these three considerations, we have made it clear that if we are to issue a CBDC, we'll adopt a multi-tier model where the central bank issues its liability, a digital payment instrument with finality, and manage the overall framework, while the private sector offers convenient and innovative services in accordance with the customer needs. The CBDC ecosystem we have in mind is that a central bank provides a CBDC that serves as an ingredient, and that the private sector plays a role as a chef to serve dishes for the restaurant guests. To achieve this goal, I think two kinds of coexistence is critical. When we talk about coexistence in CBDC context, we tend to imagine the coexistence with other means of payments or payment rails, which we can call horizontal coexistence. This is definitely important. However, in addition, I would like to emphasize here the concept of vertical coexistence, where a central bank and the private sector coexist and cooperate within the CBDC ecosystem. I will stop here. Thank you.
Thank you very much, Masaki. I'm sure we will return with some questions on this, because this coexistence is very, very interesting on where you separate who does what and what is central bank money and what is commercial bank money. I can tell you that you mentioned the amount of banknotes in circulation in the country. In my country, it's declining so quickly. I think we are beneath 5% of GDP now. And everyone, when I go outside, I don't ever have these dirty banknotes anymore. I have my iPhone, and all I have to do is just swipe it in every shop, and within 5 seconds I've paid. And I'm sure Phantom will tell us more about the innovations that the private sector is doing to provide consumers, me as a consumer rather than as a central banker, the services we want. But so we'll come back to you in a minute, because there are lots of very fascinating questions there. But let's move to Cambodia and to you, Sere, because in many respects, Cambodia has been at the forefront of the use of blockchain, in any case, in payments. So I'd really be interested if you could tell us about the progresses and your experiments, and why you're doing it and why you've designed it the way you've designed it. Please, the floor is yours.
Thank you, and good to see you again. And thank you to the OECD for inviting me to this panel. Our project, the Bagong project, it's not an experiment. It was piloted in July 2019, and it was officially launched October 2020. Now, we don't refer to our project as a CBDC, although it was often referred to as a CBDC. To us, it's a backbone payment system. And the driver behind this project is to address the fragmentation in the payment system. Now, in your country and in Japan, you may be looking into it because the country's digital payment is already high, and so you just want to go along with it and try to make it easy for people to adopt. In our case, Cambodia is a very cash-based economy, and what we're trying to do actually is to encourage people to adopt digital payment. And so when you have a fragmented system where people who use different service providers can't send money to other people who use another service provider, it makes it difficult for people to adopt, because in the end, cash will still be easier. So what we want to do is to break that bubbles in the industry and try to make it more inclusive. And so that's when we were looking into the Bagong project. And the reason why we use the distributed ledger in the first place is the peer-to-peer nature of it, right? And so in our system, we have the banks regulated by the central bank as banks. And then we have the payment service provider regulated as more like a technology service provider. So there's a much less prudential regulation imposed on them. Now, one way we can bring this fragmentation or break this fragmentation and bring every players together is we could just have them open an account with the central bank, this payment service provider, and have them join the national clearinghouse, and then have them manage their liquidity for clearing and settlement the same way we would impose on banks. And that would be counterproductive, because you are regulating the payment service provider as technology service provider, because you don't want to impose too much regulatory compliance on them. And after all, in our regulation, all the floats of the money created or the wallets that is that the payment service provider take from the user will have to be 100% deposited in the banks, right? So basically, if we were to bring them back into the conventional payment and settlement system, we'll just add this burden. And so that's where the peer-to-peer nature of blockchain technology actually makes sense for us. In this sense, the user can only send money if they have money in their own account, so that the service provider don't have to worry whether they have money in their settlement account to in the end settle on behalf of their users. So that's the reason why we adopted this DLT. The second things that we want to also address is, of course, financial inclusion. In Cambodia, we have high mobile phone penetration in the population. We have about 20 million of mobile phone subscription for a population of 16 million. And that's pretty much says that, even if you're a baby, you already have a mobile phone subscription. And so in order to and with that number, only 70% of the population have access to one formal financial services. So either a bank account or a credit or a mobile payment service. And so what we were trying to do through this project, because it's a mobile application base, we thought that if we could introduce financial services through the mobile phone as a mean, then maybe we can have more people coming into the formal system. And the third driver that we want to also address through this is the use of local currency. Kun Vichara mentions about sovereignty, right? Cambodia is a very heavily dollarized economy, and dollars is used concurrently with the local currency. And actually, it used more than the local currency. And so despite the fact that, Cambodia has maintained very stable macro fundamentals, now take away the pandemic time where we have, very high economic growth at about 7% for the past decade, actually more stable foreign exchange rate, also very low inflation rate, and yet people are not switching from the foreign currency to the local currency. And so when we did a survey in trying to understand what went wrong, why people don't switch to their own national currency, one of the reasons was the convenience. So one is that people have been using foreign currency for so long that they lost the notional value of their own currency, right? It's like in Europe, when you switch to euros, people have difficulties adjusting to the new denomination or the unit of account. It's the same way in our country. That's one. The second is that because when you do the conversion, there's so many zero in the local currency that people got confused. And so with the digital form of payment, what we hope to achieve is that to make payment in local currency easier for people, so that the adoption could be then greater. That's the main three drivers of our project. And so far, as I mentioned, it's already officially launched. We reached through our backbone payment system about 5.9 million users. We have also launched a cross-border transfer with one of our neighboring country, Malaysia. And so far it is working fine. So I'll stop here and
Thank you so much, Sari. I am actually learning a lot by just listening to you guys. So this is wonderful. I hear you say, so very important is financial inclusion, is trust in the currency. You need to keep people in the trust. And you're looking at a broader acceptance also of your domestic currency. I also hear this, which is very special for your objectives, that basically you get a domestic acceptance which is as good as or even better than the acceptance of dollars, as it were. And so that's very interesting. Now we're going to go deeper into this, but first let's now get the private sector, but also the innovation perspective. And so we're really happy to have you on board here, Phantom. So wonderful. Tell us what you think you can add to these objectives and why you think that the private sector might be able to tailor to these objectives better than the public sector. We in Europe, I'll be very honest, often think that, my goodness, do we really think that we as central banks can provide the nicest app that our consumers want? If I look at my children, they don't want a central bank app, they want an Apple app, so, but anyway, you tell us, because how can the private sector and the public sector work together, and where do you see the different roles? Phantom, the floor is yours.
Thank you, Uban, and thank you, OECD, for inviting me to this exciting panel. As a private sector and the CBDC technology company, I'd like to discuss about the actual conflict or the design objectives. So as a private sector, we can objectively think about what could be the issue and then design choices in developing this CBDC. And I'd like to mention about the CBDC design trilemma. I claim that there is a CBDC design trilemma, i.e. identity, privacy, and programmability. these three design goals are conflicting each other, and it's very difficult to achieve all these three goals at the same time. However, I'll say that there is a way to solve this CBDC design trilemma, and as a proof, MetaMUI team, we solved this trilemma. So one of the major issues in implementing the CBDC raised in the choice between a blockchain-based CBDC, district DLT, district ledger-based CBDC, or just a centralized payment-based CBDC. So blockchain-based CBDC emphasized the privacy and programmability aspect of this CBDC design, but very weak at identity or legal compliance. So, and centralized payment-based CBDC emphasize the identity and programmability, but a little bit weak at users' privacy protection point of view. So in my opinion, it is desirable to avoid centralized payment-based CBDC because it has a single point of failure problem. CBDC is one of the most important national infrastructure we are building. Once we become fully digitized society, CBDC system is the most wanted target for able hackers. We are watching every day that hacking activities of popular crypto exchanges. There's also possibility that same thing would happen to CBDC system. So if it's hacked or stopped, then national economy would be in danger. So the major problem of blockchain-based CBDC is that, and also there is a problem with the blockchain-based CBDC, of course, is that it's anonymity-based design. It's a direct contradiction to the legal framework of conventional banking system, where know your customer, anti-money laundering, and counter financing of terrorism law exist. However, anonymity is not the only way to achieve the privacy. In fact, current blockchain-based system has a problem in financial privacy point of view. DLT system and blockchain has a consensus mechanism, and to perform the consensus mechanism, all transaction data should be shared by all participating node or the servers. What this means? This means everybody knows who has how much money, who is the rich person, and then where that person send the money to, etc., etc. We should encrypt this financial transaction data to achieve the financial privacy. So privacy can also be achieved by adapting decentralized identity mechanism. There is a decentralized identity mechanism technology called self-sovereign identity. With SSID, self-sovereign identity-based blockchain, all transactions are recorded based on users' SSID, users' identifier. Since it's just an identifier, it doesn't contain any user's personal information. Therefore, privacy is guaranteed, just like the previous other current DLT-based system like anonymous-based blockchain system. So this is a trilemma between the privacy and the identity. And there is another trilemma, the programmability. So to achieve the programmability, i.e. implementing programmable money, we need to somehow collect the user's personal information. So there is a dilemma between the privacy and the programmability. Solving this dilemma requires quite a big work to do, a little bit difficult to explain. First, we need to solve the problem of centralized and serialized operation of blockchain system. Everybody believes that DLT system is a decentralized system, but actually it is not. So of course, blockchain and DLT is a structurally decentralized system, But in the operation point of view, it is very centralized and serialized system. As you know that in the blockchain, all nodes forms a single big virtual computer and process the transaction one by one at a time. Since only one node works in one single block time, we cannot increase the performance by adding more nodes. It's always the performance of one single node. This is a fundamental problem in the DLT system that slow down the transaction speed. So what we do? So in the MetaMUI, we have a hybrid architecture to achieve parallel independent processing of transactions at the same time. So by adding more and more nodes, we can achieve almost unlimited transactions per second. So once we achieve parallel operation and can run the chain code or the smart contract on the edge of the network, that means on the user's device, then we can process users' personal information on user's device without leaving the personal data outside of the user's device. We have a technology called decentralized AI technology called federated running to process financial big data without violating users' privacy in this way. So by combining centralized identity, decentralized digital currency, and decentralized machine learning, we can solve the CBDC design trilemma of identity, privacy, and programmability. So, I mean, this is not achievable, but MetaMUI is kind of proof that this perfect equilibrium of CBDC design trilemma is achievable. So basically, as a private sector, our law and goal is that whatever requirement or the objectives of the central bank and then central government, we find a way to solve the problem, this kind of dilemma. And also, there's one more dilemma. Let me briefly mention about. So there are three aspects of CBDC: retail CBDC, wholesale CBDC, and cross-border CBDC. But many of the CBDC projects, they just focusing on one aspect of the CBDC. But I'd like to mention that we should consider everything at the same time. We have to find a solution that can cover all three aspects of the CBDC. So I'd like to avoid the scenario that once we have a fully deployed the retail CBDC, and then later we want to connect this CBDC system with another country's CBDC system to enable the cross-border payment, then if we have to redevelop from the beginning and then we have to integrate the CBDC system one by one, it could be very difficult to achieve a global scale CBDC network. So this kind of basic design consideration and then some dilemma is our private sector law, and then find a solution to support the CBDC deployment of central government. Thank you.
Thank you. Thank you very much, Phantom. This is very interesting because basically you are representing the private sector and you are solving our problems from the central bank problems. So this is very interesting, and it illustrates, and I'm sure this is the way we're going to have to make this work, by interacting the private sector together with the central bank community to make it work. And I think Masaki was already hinting at this in his introduction, at where you separate what the central bank does and what the private sector does. But I think we'll have to move forwards together. What I take away from this round of introductions is we have an objective of keeping up with the digitalization of society, of avoiding fragmentation of payment systems and fragmentation of markets, of increasing trust and acceptance of domestic currency, of inclusion, increasing the inclusion of society, and lastly, of having privacy, but also identity and programmability, and even interoperability between countries. I also heard you say that, Phantom, which is very interesting, because just as we don't want fragmentation in countries, we don't want fragmentation between countries either, because the digital space does not have any country bounds. So this leads to the second round, where I would like to ask a few questions to the panelists. Let me start with a first question. Do we all agree, which is basically what Phantom was saying, that if we have CBDC, we can try and secure privacy and anonymity, etc., but CBDC will have to comply with AML and CFT regulation? So that's a first question to all the panelists. Do we agree there will have to be a filter somewhere to avoid any use of CBDC for whitewashing, for avoiding tax payments, for criminal purposes, for terrorism purposes? So it cannot be something totally anonymous out there. That is the first question. A second question is, if we have CBDC, are we going to try and limit it? Do we only want it for transactions? Or is it also fine if it is used in a big way by people in your countries for savings? So if people decide to save in CBDC rather than in a savings account at a bank. And this is a question in particular to you, Masaki, because you have had negative interest rates. And I can imagine that if inhabitants of Japan can get a more favorable interest rate by having CBDC, then you might have many more savings in CBDC. So the question also is, do we want CBDC only to do what banknotes are doing now, so to be used as transactions at the restaurant, etc., or do we also want it to be there for savings? And lastly, maybe, but then we'll move to you, Phantom, at the end. But do you see that you will be working for the public sector with all your innovation, or will you be working next to the public sector? So that's also a question, also to Masaki and to others. Is it a central bank operation, or is it the central bank doing some things and there's also a private system next to the central bank system? So who can I give the floor first? Can I start with you, Masaki? Would that be okay? Or shall we, or we could start with Bashira. Shall I start with you, Masaki?
Yeah, I'm fine with answering for the question on the savings and as means of payment. And first of all, I think it is not too easy to define the consumer's use of CBDC between the use as a savings or a store of value and use as a means of payment. And having said that, I think our primary motivation, if we are to issue a CBDC, is how we could maintain the enhance the overall safety and the efficiency of the domestic payment landscapes. So with this motivation in mind, we should be careful in maintaining the stability of the financial system and credit intermediation. And if we issue a CBDC, massive shift of funds from bank deposits to CBDC might have some implications for the financial system, financial intermediation, and even for the monetary policy transmission. Of course, the history of finance is the history of changes and evolutions. So is the history of monetary policy implementation. However, abrupt changes should be avoided. Therefore, I think the design of CBDC might require certain safeguards that would mitigate and or enable to control the impact to the financial system. Such safeguard measures would include, for example, caps for holdings or transactions, tiered remunerations, or some other measures that were designed to limit the convenience of CBDC. And at this moment, I do not have a clear answer for the question, what measure would be optimal? And the answer depends on the jurisdiction-specific conditions. Yet, in a statement published in last October, we set this issue as one of the policy considerations to explore, and we are working on it. And on your point on the conflict between the privacy and MLCFT implementation, my understanding is in the same, almost same line with you. It is true, privacy is one of the fundamental human rights, and privacy should be respected in the CBDC ecosystem. But on the other hand, the implementation of MLCFT control is grounded by some public interests. And I think some kind of ML checks will be required for the CBDC ecosystem. So that means we rule out the total anonymity in the CBDC ecosystem. But in striking the balance between these two interests, I think we should carefully design the CBDC on the privacy features. And we would need further discussions how we could allocate the responsibilities of MLCFT controls within the CBDC ecosystem.
Thank you very much, Masaki. These are very important points you've made, because basically you said the privacy will have a limit because we will comply with AML and CTF, but you also said that you would consider limits or tiered remuneration, I heard you say, so that you have a lower interest rate on your CBDC when you have more than a certain balance. So when you have more than, I don't know, 100,000 yen or whatever it would be. And so basically what that means is you would have to register the individual holding. You'd have to know the identity per person. So you have to have so it's not totally permissionless, anonymous like blockchain is now. This is important. And let's see how the developments and the thinking is in other countries. Can I move to you, Vachira, what your view is in Thailand on these trade-offs?
Yes, thank you. But first of all, let me share the view with Phantom that I agree with Phantom about when you're looking at when you're talking about CBDC, you should looking in the integrated picture. That's I think that's why we are trying to explore, to do some experiment on the wholesale, and then going to the cross-border also. And then, but meanwhile, during the wholesale, we also do some experiment that how we can use this with the corporate sector, the big corporate sector. And then now we are starting with trying to do some experiment on the retail CBDC. So at least we have a complete picture of the overall system, because anyhow, at the end, the retail CBDC, how will this link to the wholesale CBDC? So that's kind of thing that I think that I agree with Phantom about that. On the issue of AML CFT, for the wholesale, of course, when we do the wholesale, it's bank to bank, so the size, the amount is quite large. So during the experiment, we also doing some programmability about AML CFT in the experiment. On the retail, I think we are quite similar to the Bank of Japan. Masaki has mentioned that when you on our design, we have a two-tier system. So it's mean that it's the central bank digital currency, but the people who will have it from we have the service provider or the intermediary who will be the distributor, the digital currency to the public. So during that, the intermediary have to at least know your customer. So at least they already check who will be in the circulation. But as I mentioned, that in the retail CBDC, there's quite a lot of concern in the monetary policy, financial stability, and financial landscape. But if we go back, in addition to that, three big concerns on the central bank, the privacy issue, as Phantom has mentioned, the anonymity and the legal things is a big issue that we have to consider. That's why when we decide our experiment, and then we plan to do the pilot next year. So during this time, we are in the preparation of doing the pilot test of the retail CBDC. So we decided as a digital banknote. That one, the digital banknote will have lessen some concern about monetary policy, which I will talk later. But on the privacy, we also are thinking about this, the design of data privacy. What does it mean? Does it mean that the central bank can see all the data, all the information? No. So what we decide, as I mentioned, that we have a two-tier system. So the central bank will see that we will distribute digital currency to the banks or intermediaries, and the bank will have some data. Of course, central bank who will have some ultimate data, but we will make it very harder for each entity to see overall data on the privacy. That's why we try to solve about the data privacy. And if on the retail one, and if the size of the retail is not too large, we will ignore it. So we still keep some privacy. We still keep some privacy, and then still keep some features of digital note, digital bank. No, not digital note. Some features of banknotes to the customer, to the public, so that they will feel more comfortable. Because if we just announce that, oh, this is a transparent one and everybody will see everything, no, people will hesitate to use it. So that is about the data privacy. And then I also agree with the BOJ that people have the right to have their own some privacy, but in some. For us, we think that the retail CBDC, we at the central bank will be the one who have the basic infrastructure, because this is anyhow it's willing, and then it's going to be a payment infrastructure. So we will have the basic infrastructure, and on the development and on the innovation, we will welcome all the private sector to come in and move. And I'll go back to the three concerns of the retail CBDC: monetary policy transmission. So and then financial stability. When we start talking about retail CBDC, oh, if there is some concern, if there is some worry, people will shift all their money or their deposit to CBDC, because we say that it's trust, and then it's issued by central bank. And that's why first we said during this time at the first stage that we do, we will have a features of it's a cash-like. So when it's a cash-like, so it means that there is no interest. So people will not willing to hold cash, and then willing not to hold large amount of cash that will not earn their interest. So it will become some as they use as day to days. But if they want to earn something, they'll go back to, they can transfer back to their deposit at banks. And hopefully that the design that we have no financial cost when people will use it. So we try to make it more cash-like. And then on the financial stability, at the beginning, maybe we have to, but we are not quite sure how much or the limits to be used in the retail CBDC. So at least at the beginning of the starting point. And I think the issue, the big issue or the big concern that we are thinking also is about the financial landscape. What does it mean when we have a CBDC, when we have this kind of things? And so it's mean that when you're talking about P2P, so it's mean that in the future, there will be easier to have a platform, and then some other thing. What is the role of the commercial banks? Banking will be there, but the roles of commercial bank or the financial landscape will change. And then it will come back to the central bank as the the entity who have to look at the monetary policy transmission, who look at the financial stability, how will this work out? So that is the way that we try to at least try to lessen some concern of this three things and then experiment and then see how it's works. I think this is going to be a long journey for us, but at least we try to understand it. I think I'll stop here first.
Thank you very much, Vashira. I hear you say a number of things, but a few are very interesting. To have a threshold, and beneath this threshold, you would not check the identity so much, which I think might be it's an interesting new thought for me. On the lack of an interest rate, basically making CBDC non-interest bearing, be careful, Vashira, because you may end up with your interest rates at the effective lower bound at around about zero someday. I hope you don't, but I warn you, be prepared. And when it happens, it's uncomfortable and you have to choose other instruments, and then you'll need other instruments for your CBDC as well. So Seri, maybe we can move to you for someone who has the most practical experience here. So tell us what your view is on all these trade-offs.
Well, first of all, what we use, again, I've mentioned earlier that it's not a CBDC, but I think the similarity, well, there's some feature that may look similar, and that's the fact if banks want to participate and transact through our Bagong project, they first have to exchange their fiat money against the digital version with the central bank. So we keep their fiat and we credit the digital version of it to the banks. Now, once it is credited to the bank's account, they can then redistribute it to their customer. So if I'm a customer and I have a saving account with the bank, I can go to the bank and I can withdraw cash and I put it in my leather wallet, or I can withdraw the Bagong version of it and store in the Bagong mobile application that is introduced by the central bank. Now, to do the KYC, we relegate the responsibility to the commercial banks or to the members, the payment service provider, to do that on our behalf, right? And I don't think that as a central bank, we don't want that much responsibility as to ensure that the KYC is done, that the AML and the CFT, etc., are in, because then what do you do as a central bank when you have so much power? I mean, price stability is one. We also look at financial stability, but now you have to comply with all these issues. So as far as we are concerned, the way we designed it is that we know which bank holds what, but when the bank redistribute it to the end user, that's the responsibility of the individual banks to know and do their own due diligence on the customers and the users. In terms of how much privacy do we want in this sort of ecosystem, I think there is a trade-off, because you want people to go into the digital space in the first place, and you want to promote financial inclusions. And coming from, the credit bureau perspective, is that a lot of people don't have any credit history. At least if you can provide payment history, which, it affects everyone. You may not need a credit and you don't have a credit history, but everyone make payments. So at least, you need that kind of payment behavior to allow banks to understand you more, and so that they can design product and offer you product that is more suitable to your lifestyle. Now, this is a trade-off, and this is not something that we are currently implementing, but definitely in the design thinking, there should be some form of consent by the user to allow banks to do that. But other than that, I think this is the bank responsibility. In terms of, whether people are going to, switch and save in the Bagong wallet, the likelihood is zero, because the same design thinking as in the Bank of Thailand is that if you hold the money in the wallet, it's as if you hold cash in your leather wallet, which earns you no interest at all. But when we did our wallet, we make it easy that once you have your money in your wallet, which earns zero interest, at any time of the day, with the real-time sort of settlement effect, you can transfer from the wallet back into your bank account and start earning once it goes back into your bank accounts. That's the way we design it, so that people don't have to hold that cash too long in the wallet and earn zero interest. They can always transfer it back to their account through that mobile application and start earning interest immediately. So that's the way we design our Bagong project.
Thank you. So the question to you and to Vashira is, you may get a very low interest rate in the future. Would you then have a negative interest rate on CBDC in order to have something of a disincentive for a run on CBDC or people saving too much into CBDC? But anyway, so this is maybe for the next, the looking forward session after shortly. But first, back to you, Phantom. So how do you see this outsourcing? Seri basically said we would outsource the KYC and a lot of the AML requirements to the private sector. So how do you see, what are your views on all these dilemmas we're discussing?
Yes, actually, I mentioned that we already crossed the chasm of this dilemma, privacy versus identity. And I'd like to describe briefly about what will happen when you cross this chasm, and then we fully deploy the identity-based system. And before I answer that, you asked me about whether we are working for the government, for the central bank, or working with, next to the central bank. And I said that we are more close to working with central bank. So MetaMUI is a blockchain-based CBDC technology, but also this is a permissioned public network operated by sovereign wallet, of course, and then central banks and other commercial bank and government and even private sector companies together. So this is one of the global CBDC publication network. So you can think of this system as a cloud-style CBDC platform. So this obvious choice for this kind of cloud-style CBDC solution is a very small and micro nations. So MetaMUI provide the cloud services to micronations and underdeveloped countries. As you can see that these underdeveloped countries, they don't have much of previous infrastructure. And once we try to deploy this CBDC solution to these countries, and I found that we need to deploy the digital identity infrastructure first. Otherwise, it doesn't make sense. So therefore, we end up providing entire package, including digital identity, CBDC, and e-government system. So, however, this is very lengthy and complex process. So to make this development even feasible, we have to innovate the blockchain technology further. We have to eliminate the need for a smart contract programming to deploy the CBDC, and any country can publish a CBDC within few minutes at a very reasonable cost. And then they can have all the state-of-the-art, all the features of world's best CBDC solution in just fraction of the cost by having this kind of cloud-style platform. So since MetaMUI provide both decentralized identity and decentralized blockchain-based CBDC, any country adopting MetaMUI CBDC is automatically equipped with a digital identity infrastructure and digital notarization capability with various digital certificate issuance feature. This was a very interesting experience that we have. So one of the key advantages of having this decentralized standard-based identity system with the built-in decentralized public infrastructure that everybody can sign the digital signature, is that we can make multinational interoperability relatively easy. So, I mean, you can guess that we are building international cross-border payment network. So one country's digital identity and digital certificate can be verified by another country and accepted. This makes automatic extension to cross-border payment. One country's CBDC can be accepted and used in other country and vice versa. If you have one country CBDC and you travel and then go to another country on your mobile wallet, you can instantly exchange and then use it there. So this is the way that we like to build, and we are building this with central banks. And one other thing I'd like to mention about using the CBDC as a store value. There is one critical technological problem in the DLT-based technology. So one of the major problems, not well known, but in the blockchain technology, is that lack of design protocol for the user's wallet or private key management. So the user's wallet design is kind of ad hoc at best, and it's the user's responsibility to safely manage the private key. In fact, in the cryptocurrency world, user can easily forget their password, and as a consequence, they lose all his or her assets. If you use the same blockchain technology, DL technology, then we'll have the same problem in the CBDC-based system. So imagine this funny scenario. Someone worked very hard in his entire life and saved all his assets in blockchain-based CBDC. Then after his retirement, he forgot about his password and lost all his assets. This is somehow negligible design and brings the higher risk to the users. So this is where identity-based blockchain technology can shine. In MetaMUI, the ownership of the asset is, hello? So in MetaMUI, the ownership of the asset is bind to the identity of the user, not to the random anonymous private key. Therefore, after the verification of user's identity, we can reset the private key and the users continue to own the asset. This is exactly the same procedure in the current banking system. When user lost some security credentials, user can go to the bank, and after the identity verification, the bank reset the security credentials and the user continued to own the account balance. So CBDC balance should not vaporize when user forgot about the password. So this is a technical problem that I mentioned. So when we are designing the CBDC system, we should mention this kind of problem so that user can safely store their all the asset in the CBDC. I stop here. Thank you.
Thank you very much, Phantom. You make it sound so easy, as if we can solve all these problems. We have tens of thousands of central bankers and commercial bankers worldwide trying to solve these challenges on legal identity, on privacy, on regulation. And basically, you are telling us that with decentralized identities, we can address these challenges. So clearly, I think you illustrate how the central banks will need people like you and will need private sector innovation to solve these problems. May I now, because I see the time is progressing, I'm gonna now move to the final round. And we won't have a round of 1 minute at the end. We're just gonna have one round now. And so I'm gonna start with you, Phantom, because I think the public sector and the central bankers may want to react in particular to calls that you have. So the last round is 3 to 5 minutes for each of you on what you think moving forwards the big obstacles are and the big challenges for policies, for central bankers, for lawmakers, for legislation, whatever. But what are the policy challenges that we need to face, and what are the obstacles? So what are the difficulties? I will start with you, Phantom, then I will move to, we'll do it in the opposite order, to Masaki, to Bashira, and to Seri, if that's okay in terms of sequence. So let me start with you, Phantom, please. 3 to 5 minutes.
Okay, so I will briefly discuss about the implementation of sound money. So I'd like to mention Friedrich Hayek's vision of sound money should be selected by the market mechanism and flourish. So in the world of fiat currency, I would like to see every country's CBDC should become sound money. To facilitate this, I have built a collateralized asset mechanism. So that means the backup asset mechanism for the CBDC in the MetaMUI CBDC structure. So any country issuing the CBDC can set up the backup asset. For example, it could be national oil reserve, or the gold in the underground, or even foreign currency, and issue a digital certificate, prove that it is existing. One of the interesting consequences, so I mean, this mechanism can also be used as a wholesale CBDC structure. So MetaMUI is building a CBDC solution that can cover retail CBDC and cross-border CBDC and wholesale CBDC at the same time. For the retail CBDC, the commercial bank should be able to dynamically publish the CBDC based on the collateralized asset of base currency published by the central bank. So this collateralized mechanism and the dynamic without any programming capability of meta blockchain system can be used for wholesale CBDC also. But more interesting idea regarding this is that this collateralized asset mechanism of MetaMUI can be used to publish multinational common currency, similar to Euro, based on participating nation sovereign currency as a currency basket. So for example,
1 more minute, Phantom. 1 more minute.
For example, we can publish Asian currency based on the currency basket of Thai baht, Cambodian rial, and other Asian countries' currencies. With MetaMUI's meta blockchain capability, we can dynamically mint and burn circulating volumes of Asian common currencies based on the circulating volume of changes of its backup currencies. Thank you very much. And I'm happy to deliver the good news that MetaMUI is the identity-based blockchain that crossed the chasm of this identity versus privacy dilemma, and will try to help all the central bank around the world. Thank you very much.
Thank you very much, Phantom. I'm sure we are going to need your help moving forwards. We have one comment from a participant, from Pira Pong, who is basically supporting your call for a decentralized smart contract where the collection of users' private information is decentralized, and the chain code in the smart contract runs on the edge of the blockchain. So you would have users' device, such as a smartphone, which would apply this parallel decentralized identity in order to gather all the information that is needed to process these transactions. And this is clearly a big improvement in the design of the blockchain and smart contract structure. So thank you you, Phantom, and to Pirapong for this comment. Then let me move now to you, Masaki. Please, what are your key messages moving forward, the big challenges and the problems?
Yes, thank you. To be honest, for a central bank, CBDCs, I'm sure, a big business, and we have a number of challenges. And in terms of technologies, we are working on the phase 1 of the proof of concept, which is scheduled to be completed next March. In this phase, we verify basic functions of CBDC as a means of payment in the virtual environment within the Bank of Japan. And these functions include issuance, delivery, transfer, reception, and redemption, which are processed on the core ledger of the CBDC system. And we are testing 3 design models, which are different to each other in terms of ledger structure and data structure of monetary value. And for the ledger structure, we develop both hybrid and intermediated models. And for the data structure, we test both account and token-based models. So far, our works have proceeded on track. At this moment, I cannot touch upon much about the insights from the proof of concept because it's still ongoing, but we're comparing the 3 models with particular focus on performance because extremely high load of transactions are expected in a jurisdiction if we operate a live CBDC system. And the second phase, next phase of the proof of concept will start immediately after the completion of the phase 1. And in the phase 2, we will verify some additional functions, for example, safeguards to mitigate the CBDC's impact to the financial system. And also, one functionality we are considering for CBDC is offline payments. And because Japan frequently faces natural disasters such as earthquakes or typhoons, the arrangement which ensures payments, even the telecommunication disruptions or blackout, is one of our priorities. While it will be possible to provide offline payments even with current technologies, there still remain significant challenges to securely deploy it. And therefore, it might be the case that the offline payments are not provided to the public from the outset of the CBDC introduction. And so long as effective access to cash is in place, cash would continue to function as a means of payment, which ensures universal access to the public money. And in terms of operations and governance of the CBDC ecosystem, how we should design the allocation of roles and responsibility between the BOJ and the private sector is a critical issue, as I mentioned. And in this respect, we aim to establish vertical interoperability with the CBDC ecosystem. And the key for its success is, I think, how we could develop a business model that enables the sustainability of the CBDC ecosystem. And for that goal, we need intensive discussions with the private sector and relevant authorities. And we have been doing a series of dialogues with stakeholders through various channels. And finally, I would like to briefly touch upon international cooperation. This point is closely related to the G20 initiative to enhance cross-border payments, because there is a number of challenges that are beyond the areas CBDC per se could contribute, including different private laws, different AML safety regulations, different capital controls, and the necessity of exchange of currencies that requires a certain counterparty. I do not think CBDC would be a magic wand that solves everything. Yet, I'm positive and optimistic about the potential of CBDC, because CBDC has a clean slate nature that is free from the incumbent infrastructure. And also, central banks can cooperate to each other because they're free from some commercial incentives, which private parties sometimes tend to encroach other businesses. And in this context, to achieve interoperability, I think technical standards are critical. And in June, we published a report to discuss over this point. I'll stop here. Thank you.
Thank you very much, Masaki. These were lots of important points. I will take some of these on board in my summing up in a minute. Vashira, please.
Yes, thank you. For the way forward, now we will continue experimenting and doing the pilot project on the retail CBDC next year. As I mentioned earlier, that we are now in the preparation stage of launching when we do it, the pilot. So this is going to be quite not a grand scale, but a cooperation, not just only the central bank they're doing it this time. So it's going to be a central bank, commercial banks, some service provider, and then some public. Already the real things, pilots as is the real thing. So it's quite a bigger scale, a larger scale than what we have done with the wholesale CBDC. And of course, we still continue exploring about the cross-border CBDC, which now we pair with the HKMA, Hong Kong Monetary Authority, and PBC and UAE. We call it InBridge. We're trying to explore and also the BIS to do the cross-border CBDC. That is still focused on wholesale, but who knows, later on we will shift to the retail cross-border CBDC also. On the policy challenge, I think on the technology things, I think that's one part that we are concerned, because technology develop every day. So it's change, and then it makes us faster, and then quicker. It can solve some issue. For example, last time we used talking about the scalability of the DLT, but I think in the near future that some issue can be solved. But on the implication or on the implementation, I think that there is quite a lot of concern. For example, when doing the wholesale CBDC, it's 24/7, so it's working all rounds, and then so there is some impact on the existing operation, and then also on the automatic nature. So how about the compliance? At the Bank of Thailand, we still have some rules and some regulations, and then at the end of the day, you should need something like this. But if it's 24/7, how can we do this kind of thing with the regulation? And I think the implication, also the other one that is concerned is about the adoption for the retail CBDC. As you mentioned, that your son will prefer the private apps instead of the central bank apps. So the adoption is quite important. Then we do the survey before we are starting the retail CBDC. Quite a lot of survey, and then a lot of suggestion. And you better make sure that just only 1 or 2 click with the apps. Otherwise, people will not use it. So the adoption is quite important also. And then how it will work out with the tools, as Masaki has mentioned. We still have the existing payment system that is very efficient for us. We have the prompt pay. And we have if we're gonna introduce the CBDC, another payment system. So, and then we also have the cash. So it's gonna be 3 things, cash, CBDC, and e-payment. So how this will merge out, I think that's the implication of the retail CBDC. But on the cross-border, which I think it's gonna be a bigger challenge, or a bigger implication. First of all, is about, I think it's going to impact the international monetary system also, if everything is freely. So how we will do that? And then even on the cross-border project that we do, the important or the significant thing is about the network. The bigger the network, the bigger the efficiency, or the more it will be worked out. And then also, if I have a small network, and how will it interoperate among each network? And also, it's about the governance structure also in each network, and also about the data privacy. So what does it mean? One more minute. What does it mean with the data privacy? It means that each country will see or can see all the data privacy of other countries, or I think that's kind of thing that we need to do. And then each country has their own specific regulation. How will this work out? So I think that's all I want to say. So it's going to be a long journey. And then, as Masaki has mentioned, a cooperation, international cooperation at last, it has to be. So thank you.
Thank you very much, Vashira. Sere.
I will concur with everything the previous speakers mentioned. I just want to add that when there is inefficiency in the private sector, then only I think that the government or the central bank should intervene. Because at the end of the day, if it's already cheap, if it's already efficient, it's safe and secure, why would the central bank want to come in this space? Unless you effectively allow people to have a bank account with the central bank and you give them higher interest rate. From a consumer perspective, it doesn't really matter for me. As long, I mean, if it's already efficient, it doesn't matter whether it's central banks or private. But going forward, I think the wholesale CBDC would make a lot of sense, particularly for cross-border trade settlement. A lot of countries now are looking into local currency trade settlement already. If you have this available, if central bank can work together and find a way where we can do this cross-border, then I think that would be an interesting premise of CBDC.
Thank you very much, Siri. Let me just try and summarize what the key takeaways are, at least for me, of this very, very inspiring session. First is that in terms of the goals of CBDC, we are clear that it's the digitalization of societies, it's avoiding fragmentation of payment systems, ensuring trust in a domestic currency, promoting inclusion. I also heard in this last round, consumer-friendly, issuing a consumer-friendly product. And I also heard that the trilemma of identity, privacy, and programmability is solvable. So it is doable to achieve this in the central bank space. The second key takeaway is that there will need to be compliance with the regulations. So with AML, with Know Your Customer, and counterterrorism financing, and all such regulation, CBDC will need to find a way to do this. The third takeaway is that partly because of the technological and the innovative part, but partly also because commercial institutions are better at some things than central banks are, it will have to be a central bank and private sector cooperation in the development of this new CBDC, and KYC elements, for instance, may be outsourced fully to the private sector. A fourth instrument, which I thought was very interesting, is that we could have a threshold below which we don't have too many checks and whatever, because, you know, if it's just a very small payment at a supermarket, then that's a different concern above a certain threshold when they're really substantial. A fifth one is that there are also operational risks with CBDC, and earthquakes were mentioned, typhoons, other things. I also heard the need for 24/7. So there may be a need for offline use of CBDC as well. As a last point, which I heard a lot in this last session in particular, is we need international cooperation in order to actually ensure, if I think of all the compliance regulation that is often domestic, so it's different in one country from another, and so we will need international cooperation in order to achieve interoperability also between countries. So thank you very, very much to all of you for these insights. And you know, wonderful, because I've learned a lot as well. I thought I knew a lot about it, but I've learned new things. So let's agree to stay in debate with each other, to be open in sharing our the lessons we learned, and in particular to Phantom to keep innovating and to provide us all your insights so that we can leverage upon each other and make this CBDC work. So with this, let me give the floor back to Mamiko, back to the OECD.
Great. Thank you very much, Art, and thank you, panelists. That was a fantastic session. So we'll close off this session for now. The next session will start at 10:45 Central European Summer Time or 5:45 Tokyo time. So please hop on to the next session. You'll have to log off and log back again, but we'll see you then. Thank you very much.